It's the final day of the Insurance Conference 2015. Risk Africa TV is coming to you from Sun City. We're joined now by Willem Smith, MD for Personal Lines at Hollard. Thank you very much for joining us, Willem.
Thank you.
Willem's just been part of a very interesting panel discussion looking at motor and the state of the motor insurance industry in South Africa at the moment. You raised some really interesting statistics around disruptive technology and how that's going to be changing the motor industry. And it sounds like we're going to be having a very, very different kind of conversation in 10 years' time when we have the same panel. What's your sense about, if you could just unpack for us what those changes are likely to be and what your sense is of whether it's going to be a positive or negative change for the industry?
So I think firstly, disruptive technology is moving at such a pace that my personal view is we underestimate the impact that it will have on the motor industry per se. It might take quite a bit longer in South Africa due to the fact that most of our cars are between 7 and 11 years old, and the change and the adoption to change from that perspective might be slower here. But in the rest of the world, especially in Europe and the States, there's huge changes already happening. There are already 400 driverless cars driving around in California, and they've been driving around since 2009 with very few incidents. Actually, no accidents caused by those cars themselves. One or two bumper bashings by somebody else that drove into the cars. So my take is that in 10 years from now, the conversation will be very much around, do you actually own a car? Or how was your ride in your driverless motor this morning? And I think from an insurance perspective, we will move away from insuring the physical asset rather to either insuring the passengers in the vehicle or the system that governs the vehicle, or if there's any failure from a satellite perspective or hacking perspective. So I think it's a fundamental change, and it might not be in 10 years, but it's going to come.
We spoke this morning about the situation with third-party or compulsory third-party cover in South Africa. The battle goes on. We've seen many of our neighbors getting this right on the continent, Mozambique, Nigeria recently bringing it in. What is the hold-up, and is there any progress?
So there's little progress. From an industry perspective, SAHIA perspective, we've been trying to lobby government for at least the last 10 years that I'm aware of. We've recently launched a new initiative, and we've contracted with one of the big auditing firms to come up with a study that will show the benefits of having third-party compulsory insurance in South Africa, and then go back to government again. We've tried quite a few angles. We've tried National Treasury, we've tried the Department of Transport, but it's really to get all those departments and organizations into one room and get an agreed strategy on how to take this forward. To my mind, there's huge benefits, not just from the current insured perspective where costs will come down, but if you drive a car and you're not insured and you are in an accident and that car might be financed, you sit with a significant risk. Not only will the insured individual sue you for damages on his or her car, but you'll also be held liable for any losses on your finance deal. So you can actually lose quite a bit of your own credibility and your finances, and it'll take you years to recover.
There's been a lot of discussion also about the way that costs in the value chain are pushing up the price of insurance as a product and making the sustainability of the industry a real challenge. What would you say are some of the key areas which need managing better or need to be relooked at to manage those costs? It sounds like there's that certain areas of the value chain perhaps need greater regulation control from a government perspective. Are there other solutions?
So it's really a multifaceted, multidimensional issue. Because if you look at the value chain all the way from the sales component until the claims component, there's costs at every step of the way. So my take is that, as insurers, we have quite a long way to go around increasing our efficiencies. Most of us sit on old technology, old platforms which are expensive to run, expensive to administer, and that cost obviously gets passed on to the consumer. But then there are many other costs that's totally outside of our control. which are, for one of the biggest costs in any claim is the cost of the part. So there's very little control around parts and parts pricing and costs of that. Very little control about scene of the accident and the management of that, and how the tow truck environment could either take your vehicle to one of their own panel beaters or to a panel beater that's the insurer's choice. And if they do take it to one of their own panel beaters, there's normally quite an expensive release fee involved, which pushes up that margin quite a bit. So it's all of those factors that are quite important. And my view is that if one can regulate the towing industry better to assist with any of the unpalatable practices that really happens from time to time in that industry. I think it's very difficult to generalize because there are really good operators, but then there are really bad operators as well. And there's really very little formal regulation of what happens in that industry. So one can regulate that a little bit better. That would go a long way to assist. If you can bring down the parts pricing, that would go down a long way. And if insurers can increase their efficiency and pass that back to the consumer, then the entire value chain is cheaper, and that will bring insurance down. But if you don't have a insurance offering that goes to the masses and a much bigger reach, as you mentioned earlier, there's 11 million cars on the road. Only about 35% of that's insured, so that's close to 4 million cars. So unless that gets addressed in a big way, the costs will still be quite expensive for the people that do pay insurance.
So it's about a major change across the way we're tackling the market. Thank you very much, Willem.